Good day, everybody. Max Capital here with Wall Street Institute and Company. Let's look at another market breakdown for the week of 17 to 21 May 2021. So on top of our watch list, we have the US dollar index, gold, USDJPY, Euro Pound, and the Dow Jones. Now, let's get to market breakdown from a technical perspective. But remember, before we get there, we have to also look at the fundamentals so that we can get a brief idea about what's going on in the world out there, politically and economically. Right. So, headlining our fundamentals this week is China. So, China new home prices growth at 8 months. China retail prices rise. China output growth matches estimates. China fixed asset investment beats estimates. So from this overall articles, before we dive deep into them, you can tell that the Chinese economy is doing well at the beginning of this week. Now, looking at other market sentiment. So on the commodities market, gold hits fresh 3-month high. Crude oil gains slightly. So here, according to gold, gold is positively correlated with the Australian dollar, since Australia is one of the top producers of gold in the whole world. So they expect the Aussie to gain as well. Crude oil is correlated to the Canadian dollar, Canada being the second largest producer of oil after Saudi Arabia, basically Middle East countries. So they expect oil prices to go up again. Then the US dollar index lifts early and in early deals. So as the market opened, the US dollar index gained some strength. Now let us look at that from a technical perspective. Now remember, strategy is 90% technical analysis and 10% fundamental analysis. Looking at the dollar index in front of our screen from a high time frame structure, which is our daily time frame. There, you can tell that we're in this big corrective structure. So when we pattern separate, you find that we've got patterns within patterns. We also have this correction in form of a flag that we expect the market to come to the upside before it can give us an impulse movement to the downside. So looking at a slightly smaller time frame so that we can pattern separate, refine our charts. This is what you'll find within that corrective structure. We have another pattern of a similar formation. So what are we looking at here? What we understand about price action currently and the outlook or the focus here. So current market price is currently around this area, so they expect it to drop down, push up, break this bigger corrective structure, and maybe make another flag type of a pattern before it rallies to the upside. So US dollar index, we are more bullish at this point. Long term, we're more bullish, but until we see these lows being tagged in, or this order block here, finish order block before it can move to the upside. Now moving on to gold. Gold is negatively correlated to the dollar index. Now, since the dollar index, we're expecting it to be more bullish. So with gold, would expect gold to be bearish. From here, going to the higher time frame structure, we have a very nice corrective structure here. Still in a corrective phase. I would say with gold, we'll be expecting more upsides towards the end of the year. Now that would mean we still in not in a full economic recovery. So this is what I would expect. Two things could happen here. So it's either gold from where it is, it will just tank to the downside, or it can come to this highs, to this previous supply area, and move to the downside. I don't know how long maybe that bearish move will be. So let us step down to a lower time frame so that we can investigate this further. Now going to a 1 hour time frame. Currently on gold, this is what we have. So we previously broke the highs of 1845 that we were failing to break last week. So market can't knock this resistance a couple of times. So now our sentiments would be refining our analysis here. Our sentiments now would be, since we already had 2 touches on the top side, remember that track pattern. So we have the first touch there, second one here. So we're expecting a third touch in this area before the market shoots to the downside. Right. So that's it. In terms of gold, we are our sentiment is more bearish than bullish. So this is what we're looking at currently here. So probably at the top of this structure right here, we'll be selling hard maybe to the bottom of this, so around 600 to 637 pips to the downside. A very big risk reward ratio trade, probably 1:6. That's a good risk reward ratio. Now looking at the US dollar, Japanese yen, which now is positively correlated to the US dollar and negatively correlated to gold. So as always, we go with the higher time frame structure. We can't emphasize that enough. It gives us the truest picture of price action. Now, in the previous week, when it comes to the dollar against the Japanese yen, as you can see, we're in this corrective structure in the form of a flag or a pennant, if you may. So we did break from this high, so this looks like a retest. Now with our retest, we're expecting to test this flip zone or an order block that's within this big bullish candlestick. Now let's go to 1 hour time frame once again to make a further investigation of that. So since we are out of the biggest time frame structure, this is no longer relevant. This will play out break. This is no longer relevant, so let's this now. So at this impulse, now we're in a corrective structure. Once again, just like how we expecting the dollar index to move. So here, that. So expect this to come down here, beat previous highs, and move to the upside maybe to 111.0 or maybe 0 levels to move to the upside like that. So with the with US dollar Japanese yen, we are more bullish, so one can take make an entry at those lows here, targeting 111, so 111 like that. So with 27 pips stop loss, it's a nice 1:7 risk reward ratio trade. So here, if you're risking 1% of your account, probably get a 7% return. Now remember, as soon as the trade gives you a 1:2, you need to move the stop loss to break even so that you can maximize on the upside and minimize the downside. Now next is the euro bond. interesting movement we saw last week from this pair. So we're expecting the euro pound to, we're more bullish on the euro pound basically. So currently we look like we're in this expanding formation. So we had an impulse, now we're just playing around this area. So now that's a high time frame perspective. So we're expecting it to revisit this low or this previous demand area that was left when we made this impulsive movement. So they expect it to continue to the upside probably in that manner. So continue to the upside like that. But the beginning of the trend would be here. Lower time frame. So try to always like to go to a high time frame and then make 3 steps back to see what's happening with price. To see what's happening with price. So right now, what we have is this price has already made 1, 2, probably we need a third touch here. So in this corrective structure. So this is what we're looking at. Looking at the left-hand side to see a possible supply area. We've got one here. Right. So we're anticipating the market to push to those highs and then make a move to the downside. Remember, when the market breaks structure, it has to retest first. So before we carry on with this bullish movement, with think that one can also get a nice bearish setup here with 16 pips stop loss, 16 or 20 pips, 432 pips to the downside. Now that is a very good trend. Remember, high time frame structure is saying we are bullish, but then before we take the bullish movement, we can also make money on this down movement. Now look at that. The risk reward ratio is a 1:8. That's very good. Now going on to probably our last pair or markets in our watch list, which is the US30. So now according to the US30, with this one, it's hard to tell whether we're bullish or bearish, but we're going to look at it structure-wise. Now, structure is very paramount to how we analyze the market. Now, if we look at the market in terms of the Dow Jones, this is a bullish market. High, low, high, high, low, high. Did we get a high, low? No. Instead, what did we do? We broke structure right here. So this is probably coming back for a retest for price to continue pushing lower. So basically, that's our overall sentiment. Now, going to the lower time frame structure, we need to investigate if that is true, because when we go deep with these time frames and just keep on refining, we get the truest picture of price action, ladies and gentlemen. Now, this is all pieces of analysis that is no longer relevant. So personally, this is what I would expect from the dollar index. So we tested this previous it's a previous supply area here, and market respected it and moved to the downside. So I think the next untested zone would be here, right around 35,000. So this is what we expect from this. We expect it to come up here before it moves to the downside. First target would be probably here, and the second target at that previous area of demand, low, you might say. But if we're in a bearish movement, we have to beat this low. So you can place your trade there, probably pending order. I would prefer that, and then target this lows like that. That's all. That is the US30. Now, generally, that's it with current market analysis. Now, with that said, moving on to our YouTube channel, would like to show our appreciation for the increase in subscribers. It might look like we're taking very small steps, but we do appreciate that. We do appreciate the audience. We do appreciate the feedback that we're getting from you guys. So that really shows that whatever we're posting on a daily basis or weekly basis is really providing the value that we're trying to project to you guys. So still got 2 videos so far, recording the third one. So midweek you should expect a video probably on market structure, so that you can understand the reading of price action, because if you're in sync with that, you're probably going to make money, because if the market is on an uptrend, you're going to catch it. If it's in a downtrend, it's going to be easy for you to catch it. Now, ladies and gentlemen, that's it for the market breakdown this week. Have a very, very good trading week. Trade safely, manage your risk, and know that anything could happen in the market. You can't master the market, but you can master yourself and your strategy. Now, with that said, see you in our VIP groups. If you don't know how to get access to that, please go to the description below and follow us on our socials. Ladies and gentlemen, bye-bye. Cheers.